Let us see the next question. Mr. A can earn a return of 16% by investing in equity shares on his own. So if at all he makes investment on his own, he can earn a return of 16%. Now he is considering a recently announced equity based mutual fund scheme in which initial expenses are 5.5% and annual recurring expenses are 1.5%. You are required to answer that how much should the mutual fund earn to provide Mr. A return of 16%? That is a question. Everybody is requested to go through the question, please. Then we'll discuss that how to do it. Let us have understanding of the question. I am explaining the question to you and then I want you to tell me answer in the chat box. The question is providing the information that Mr. A is having certain skills, and with that skill, if at all he makes investment, then in that case he is able to earn a return of 16%. That is what's the information given. He is reading newspaper, he is following say certain like the quotations or say some like the he remains in touch with the like the media, and with that say he is able to earn, let us say, 16%. Now he is considering a recently announced equity based mutual fund scheme. So now he is considering that instead of the managing portfolio on my own, let me make investment in mutual fund. The question is providing the information in which the initial expenses are 5.5%. So initial issue expenses, it is 5.5%. Further, annual recurring expenses, are 1.5%. You are required to answer that, say how much should the mutual fund earn to provide Mr. A return of 16%. So question provides that say what is the rate at which the mutual fund should earn so that it is able to give a return of 16% to Mr. A. That is a question. I request you to make calculation of this new answer and put your answer in the chat box. So let us have understanding that say how to make the calculation of this answer. Dear students, over here we can understand something like this. That is say taking certain values to explain you. You do not have to write anything. Let us say that say Mr. A has an amount of 1 lakh for the purpose of making investment. It has been given that say he is able to earn an income of rupees 16,000. So if at all he is making investment independently, he can earn an amount of income rupees 16,000. So of course, when he is making investment in mutual fund, he is expecting minimum 16,000 rupees of income. It has been provided that say there is initial issue expenses, that is 5.5%. So 1 lakh into 5.5%, that comes to 5,500. So the net amount available for the investment is 94,500 for the mutual fund. Okay, I have just say taken an assumed amount of 1 lakh. Instead of 1 lakh, if at all we take any other amount, the answer is going to remain same. Okay. So the net amount available with the mutual fund for the investment is 94,500. Now listen carefully. income from mutual fund less annual recurring expense and net income. We understand that so the net income of the mutual fund should be rupees 16,000. That is the minimum expectation of Mr. A. Annual recurring expenses are provided to us as 1.5 percentage. Importantly, friends, so it will be calculated on 94,500 and not on 1 lakh, because always the expenses ratios are provided based on the actual investment which the mutual fund is making. So 94,500 into 1.5 percentage. So 1417.5. That is deducted from the gross income, and with that so the net income will be calculated. So the gross income should be 17,417.5. So we understand that so the gross income should be 17,417.5 from the investment of 94,500, and this will give us the rate of earning. So the rate of earning of the mutual fund should be 17,417.5 divided by 94,500 into 100 for getting answer in percentage term. So the final answer is 18.43 percentage. So minimum rate of earning of the mutual fund should be 18.43 percentage, so that Mr. A can be given a return of 16 percentage. That is what we understand. One of the area for which the students have number of times doubt is about the amount on which the recurring expenses are to be calculated. They take 1 lakh rupee. However, friends, it is supposed to be calculated on net amount which the mutual fund has invested, that is 94,500. This is what we understand. Importantly, friends, we understand that say this 5.5 percentage is one time expense and this 1.5 percentage is recurring expense. So there is a difference between both of them. So whatever the one time expense is deducted from the amount received, and whatever the recurring expenses is taken into account, say for calculation of the minimum income. This is the way say we understand the answer. Now apart from this long method, there is a short method also by which you can do it. First of all, I am giving explanation to you say with that short method. The short method works like this. Required return by investor, that is Mr. A in this example, divided by 1 minus initial issue expenses. Investors require the return of 16 percentage? Yes. Initial issue expenses are 5.5 percentage? Yes. So use your calculator. 16 upon 9.945. So the grossed up return should be 16.93 percentage. So the mutual fund should be able to earn 16.93 percentage so that it can give return to the investor, plus it is required to meet with its own recurring expenses plus annual recurring expense, that is provided to us as 1.5 percentage. So just add both of them. So in that case, the answer is going to be 18.43 percentage. Whatever the answer that say we already have calculated Similarly, we are required to do this answer. We will be able to get this answer. And from examination point of view, either of the presentation is acceptable. Dear students, from examination point of view, going with this method is of course preferable, yet I am dictating both the methods to you. So, written answer. Assuming that Mr. A wants to invest rupees 1 lakh in mutual fund. Working note number 1, calculation of minimum income required by Mr. A. So let us compute the minimum income required by Mr. A. It is investment into cost of capital. Amount of investment is 1 lakh and the required rate of return is 16%. That comes to rupees 16,000. Working note number 2, calculation of amount available with mutual fund for investment. In that, amount received minus initial issue expenses. Amount received is 1 lakh minus 5.5%. That comes to 94,500. Working note number 3, calculation of minimum earning of mutual fund so as to give a return of 16% to Mr. A. In that, income of mutual fund less annual recurring expense with that, so the net income will be found. So the net income is 16,000. Amount of annual recurring expenses will be 94,500 into 1.5%. So that comes to 1417.5. So the gross income of the mutual fund is total of this two, 17,417.5. This 94,500 is an important figure. So it is found as 16,000 plus 1417.50. This is the way the gross income of the mutual fund will be found. So rate of earning of the mutual fund. It is income upon investment in 200. So the earning of the mutual fund should be this much: 17,417.5 upon 94,500 in 200. That is the way the minimum rate of earning is supposed to be found. It comes to 18.43 percentage. This is the way the rate of earning of the mutual fund is to be found, at which mutual fund can give return of 16% to the investor. This is what we understand. First for keynote, second, and the third. Now I am writing the alternative method. In that, return required by Mr. A, that is investor, divided by 1 minus initial issue expenses plus annual recurring expenses. So we have made the gross up of the return to be earned. So it is 16 percentage divided by 1 minus 0.055 plus 1.5 percentage. 16.93 plus 1.5. So 18.43. This is the way we are supposed to calculate the minimum return that the mutual fund should be able to earn. Second part of the question: whether Mr. A should make investment in the mutual fund? That is a question. I want you to write answer in the chat box. Friends, for the second part of the question, we can say that it depends upon the rate of earning of the mutual fund. If at all the mutual fund is likely to earn at the rate which is greater than 18.43 percentage, then in that case, yes, Mr. A should make investment through the mutual fund. If at all the expected rate of earning is less, the investment should not be made through mutual fund. So write down final answer. Answer for the second part of the question: Mr. A is advised as under. Rate of earning of mutual fund, that is supposed to be compared with the 18.43 percentage. If it is greater than 18.43 percentage, then in that case, yes, you should make investment through mutual fund. If it is less, then no, you should not make investment through mutual fund. If it is same, then you are indifferent whether to invest through mutual fund or not. That is invest question mark. Yes, no, and indifferent. So summary of the entire answer. First of all, we have made an assumption that say an investor has an amount of 1 lakh and he is considering making investment through mutual fund. First of all, let's say his minimum requirement is 16,000 rupees of the income. When he is investing in the mutual fund, then 5.5% is the initial issue expenses. So 94,500 is available with the mutual fund for investment. So mutual fund should be able to earn 17,417.5. That is calculated as 16,000 plus 1417.5. That is the way the backward working is done. And with that, so the gross income is calculated. So the rate of earning of the mutual fund is 18.43%. There is an alternative method wherein this is a shortcut but the conceptual method. The 16% is converted into a kind of, so it has been grossed up. That comes to 16.93 plus recurring expense of 1.5, that comes to 18.43. So if at all the rate of earning of the mutual fund is greater than 18.43, make investment through mutual fund, not otherwise. This is the way we can draw the conclusion.